What is going on, everybody? Q here from Hyperstocks. Thank you so much for coming on board. In this video, we're going to go over the MACD indicator, which is going to be this indicator that I have pulled up on the bottom of this chart. If you're not familiar with what the MACD indicator is or how to find it, you want to go to whatever platform you're using. You're going to go to indicators and you're going to look up MACD, and it's going to be the moving average convergence divergence. So it's a mouthful, so people call it the MACD, and here's how you're going to be using it. The traditional ways that you're probably hearing about are using the crossovers and trading the crossovers on the MACD. So in this video, we're going to go over some charts. We're going to look back at the history, see just how effective the MACD is, and if you should be incorporating it into your own trading. I personally always have the MACD on my charts, but I use it with the combination of the relative strength index and moving averages. Overall dynamic of the market, overall trend of the market also matters, so you kind of want to include it with the rest of your charting and not just trade solely based on the MACD. For this specific video, I'm going to only focus on the MACD just so we can see the success rate and measure how often the MACD actually gives us winning trades. So without further ado, let's go ahead and get started. What I have pulled up here is the S&P 500 or SPY, and I'm going to be looking at the daily chart, and soon after I'm going to be looking at the shorter term charts. That way we can see how the MACD is used during day trading. So first things first, let's go ahead and take a look at the daily charts. We can see that the MACD, let's go ahead and explain a little bit about the MACD. So the MACD, as long as it's above its zero line, so the zero line is going to be the middle line. As long as it's above that zero line, typically it's going to hold the stock, the market, whatever chart you're looking at, in bullish territory. Once it dips below that bullish territory, so once it dips below zero, that's when the market often reverses. But as long as the stock or the market that you're looking at are going up, then the MACD is generally going to be above the zero line. I'm going to show you another example here. Here's a stock in which was downtrending for a number of months, and it continued holding below that zero line for some time, and then the moment the stock peaked and broke above significant levels, the MACD moved itself over into a more bullish range, a bullish territory, and it continued to hold that bullish territory even until today because of how much momentum there is on the stock. So that zero line is going to be either the bullish trend or the bearish trend that you're looking at the stock, and of course it varies whether you're looking at day trades, at the daily candles or the shorter term candles. Now, when looking at the MACD, you want to pay attention to two different things. So the two different things to pay attention to when looking at the MACD are going to be the histogram, which are going to be the green and red lines that you're seeing over here, and then you're also going to pay attention to these lines, the crossovers they have, and the distance they have apart from them. So let's go ahead and talk about this. The S&P 500 once again, and let's talk about the most recent 4 months that the MACD could have displayed some kind of potential reversals that we could have traded the markets on. So first things first, let's go ahead and talk about this first crossover right over here. The MACD is typically a little bit of a lagging indicator, so it's not going to indicate a crossover until a little bit after it happens. And sometimes, more often than not, you're going to find out the crossovers, if you're using the 10 and the 20-day moving averages, the crossovers tend to replicate one another. But the only thing that the MACD tends to tell you more is the momentum in the move that's happening. So when the crossover occurred up here, this was near November 25th of 2021. When this crossover happened and the MACD crossed over, the moving averages crossed over, you can see that the MACD dipped, but it never came down below zero. So as we dipped and we came down to that support, we want to pay attention to the distance between these two lines and how much think of these red lines as momentum. So the stronger these are, the more momentum there is in that selling pattern. So you want to make use of your supports and your resistance points when you're looking at the MACD crossover. So knowing that we were coming down to a support, it was an easy measure to know if we were going to continue selling, these red lines would have seen a little bit more pressure, and then this line would have came down further away from the from the flat line. So the blue line would have been a little bit further away. It would have crossed over something like this. So notice how the crossover here was more gracious, and then the stronger crossover got a stronger sell. So as soon as the MACD crossed over or attempted to cross back, the closer these lines are, the weaker the histogram is, the more likely that cross down was not going to continue. However, if the stock market got rejected here and we came down again strongly, we came down on the chart, we came down pretty strong. We came back to that 100-day moving average again. But notice how the MACD didn't really flinch as much. So the dip was also very slight. It wasn't a very strong dip for us to say that, yes, selling pressure is going to continue. Notice how the histogram also cleared itself up. In fact, it went back into a green zone. But there is another thing that the MACD tells you, that the RSI that tells you as well. So if you're not familiar with the RSI, there's something called a negative divergence. So if the MACD makes a lower low and gets closer to that zero mark, while the market or whatever stock you're looking at is making a higher high, then you want to pay attention, because that means the momentum of this move was weaker than the previous move, which is called a negative divergence, and it also applies to positive divergences as well, which we can cover in another example. But considering this crossover up barely had those lines, so one, the key indicator here for a reversal would have been the negative divergence. So we made a higher high but a lower low. Number two, when we did cross back over here, notice how the lines stayed very close together. That means the momentum was weak, and you can measure that also through the histogram. You can see that those green bars did not have that much momentum in them. They didn't give that much of a strength move. And so as soon as we saw the selling candle and then the MACD crossed over again, even though you can see that the crossover occurred right over here, and then even notice how this time we came down, and when we bounced up, unlike this time, when we bounced up, the MACD continued to spread wider apart. So this time around, when we came down to the 100-day moving average again, the MACD continued to be apart, and notice how strong the selling pressure came in on the histogram, which is considered more momentum in selling. And then the moment we dipped below zero, you can see that the sell-off intensified, and so did this histogram momentum. So right now, where are we at with the market? There seems to be some kind of reversal or some kind of indication that we're going to be in a reversal, and that's just based off the candlestick charts. You can see that the MACD is trying its best to cross up, and you can see that even the histogram is beginning to show a little bit less momentum on the downside. So going into, for example, if you are looking at the markets right now on March 17, 2022, and you're looking for a potential sign tomorrow that the markets may continue moving up, you want to see a cross up from the MACD, and you also want to see these red lines begin moving up into a green territory. But we're not safe. The MACD won't indicate a very safe crossover until we're back closer to that zero mark. So the further we are drifting away from zero, the more likely this move is going to fail and have us move back down. It may force a little crossover, and then if there's not enough green momentum built up in the histogram, then we're just going to come right back down. And that's just because market direction generally is down right now, and the MACD is holding below that zero mark. And so let's look at a shorter time frame or a shorter term example here. We can see that the MACD has a ton of use in shorter term time frames, not just longer term time frames. If you are a long term trader, maybe the S&P 500 won't be the best kind of example to give, but let's see on a long term basis how you could be using the MACD for your own trades. Let's take a look at a little bit of a steadier chart here. And see. So if you're a long-term trader and you're wanting to use the MACD for your trades, you can see that there was a time in history in which Apple was consolidating. I mean, why not use the MACD on a very strong chart if you are a swing trader that holds positions for 2 to 3 months? Why not make use of it and try to take on those crossovers? Obviously have stop losses in case those fail. So here we have Apple in the beginning of March last year. We get a crossover from the MACD. Here we wouldn't have been safe, but the crossover, notice how it carried Apple above zero, and then the momentum in that move was also strong. So we would have played the crossover here and rode Apple up, and then the moment it crossed back down, this would have been a selling signal. So we still walked away profitable, and this would have been our entry signal right around that let's see, 125 level. And then the moment it crossed back down, which is right around the 130 level, we were able to sell. So still captured profits. However, it wasn't as profitable as it could have been. And you could have used other indicators, for example, for that to kind of help you or guide you through that. So when the moment we cross back over, say we sold, we still made a gain. That's a successful move from the MACD. Come back down, MACD back below zero, but crosses back over. So this was your buy signal again. And if you buy, you're going to be able to ride the momentum up. And as long you see how these lines are getting further apart and these green bars are getting stronger, that means there's a lot of momentum in the market. It's a nice steady flow. It's not shooting up. It's moving up above zero, further and further up towards positive 10. And so it's moving with strength. And even when it kind of sees a little bit of pullback, the market comes down. Notice how the MACD still holds its ground pretty strong. So even though there was a market pullback that was strong, the MACD didn't come too close together, and it came back down, crosses down. This would have been your sell signal. So if you bought at the buy signal, which was right around 128 again, and you sold again at the crossover, which is going to be right over here, so that's the first crossover that happened, you still would have covered, what is that, 128 to 145. So that's still a pretty good gain. That's double-digit percentage, if I'm not mistaken. So you're only using the MACD crossovers here. So you're only using those crossovers to buy and sell. MACD comes down. Let's see how successful this signal is. So MACD crosses up. However, you see there's a key indicator. You remember those histograms. There's not a lot of green buying. You want to see more momentum. You want to see that momentum. Also a negative divergence. So notice how this high was lower than this high. However, on the MACD and on the RSI, this high was higher than this high, which is a weak momentum in the market in general because you're seeing that negative divergence. But let's say you didn't know about divergences and you bought on this cross up. You would have taken a loss a few days later when it crossed back down. And the moment it crossed back down, notice how the MACD came down. The momentum picks up significantly right on that sell, and you're able to see how the MACD carries the stock down, and then eventually what I like about this specific move is that it didn't come down too far below zero. Even though the histogram has strong momentum, the MACD 2 lines didn't cross below zero, which is a good sign, which is also right around the time in which this specific stock, Apple, came down to test its support. So if it's at the support and the MACD is not below zero, that means there's good momentum. That means that the momentum on the selling side has not really picked up that strongly. And so this, if you're using a buy signal again, this is your crossover. Stock moves up, MACD crosses over, you enter the stock right around 148. You're going to hold the stock, pull back. There's no crossover yet. You're still holding the stock. You're going to keep holding. There's no crossover yet. Notice now the MACD is carrying you up all the way. There's no crossover yet. You're still carrying that MACD. You notice how it's still moving. Even though there's a pullback, there's still significant momentum to the upside, and we're holding way above zero. So still no crossover. So now you're riding the stock all the way from $145 all the way up until the next crossover, which is going to be right around 175. So you covered another $30 in gains just based off those crossovers from the MACD. You could have kind of measured the fact that we were gonna move back down. If you know a little bit of technical analysis, you can see that there's somewhat of a double top. There's the negative divergence. So now you're starting to look for those weaknesses, and the stock had drifted way too far from its 100-day moving average. So all of that combined with the MACD crossover, now you have a sell signal that takes you back down. And notice that you could have predicted or kind of foreseen how strong this selling was actually going to be just by this momentum. This momentum came so far down into the negatives that this move back up barely carried the MACD back up. So even though the stock bounced way back towards that 180 mark, Notice that the MACD was way closer to 0 than it was at this time. Therefore, momentum was weak. Even on the bounce, the histogram, not once did it go into green on this bounce, which is a key indicator that this momentum and this move up is a weak one, and the stock is likely going to come back down. Notice, failed to cross up. This whole time, you have no buy signal whatsoever. Now, when the MACD, if this stock continues to move up, when the MACD begins to shift that histogram above 0 into green, and then the MACD 2 lines also move back into green, and there's a cross up, now we can call ourselves safe again, and we can potentially play a cross over to the upside. So that's over a longer term time period. If we look at, for example, the hourly time period for the MACD, we can kind of use it the same exact way. It's not going to be as what's the right word? It's not going to be as accurate per se. So on the daily chart, you're going to feel the MACD is going to be a little bit more accurate. On the hourly or shorter term time frames, be ready to always have stop losses set just in case the MACD fails and doesn't give you the move that you need. So let's go ahead and repeat what we just talked about on the daily chart, but instead let's talk about it on the hourly chart here. You can see that the once again, MACD crossovers, we're going to see how successful it is. MACD crosses down right here. This would have been a sell signal for whoever was holding. This is the hourly chart. You can see that the moment it crosses down, dips back below 0. So you're going to see that the MACD moves up above and below 0 more often on the shorter term time frames because momentum shifts more often when you're looking at a shorter term time frame. So cross down, shifts below 0, red momentum picks up. The whole time, even on the bounces, the MACD continues to fly down. Momentum continues to be strong, even though Apple is trying to, you see, bounce, but the MACD doesn't even flinch. And even when it bounces, this is such weak momentum, and the crossover barely lasted at all, which is where you need to be familiar with the trend of the market. If the market trend is down and the crossovers aren't too strong and you're not seeing strong momentum, then you may want to avoid entry on crossovers. But let's say you did enter this crossover here, you would have needed to set a stop loss below the previous day's lows, and so you would have been stopped out. So there's a failed signal from the MACD. There's another signal from the MACD. So you see how there's such strong momentum in selling? MACD crosses over. If you played this crossover, you would have entered the stock right around here, which is not really a good play if there's a bearish trend in the stock. So you don't want to enter at the highs when it comes to bearish trends, because now you're kind of entering near the top of a resistance. So you would have wanted to enter on a support. So if you were to enter on this buy signal right here, this would have been a bad entry. But if say you did and you never got stopped out, so you wouldn't have gotten stopped out, because if you entered here for a swing trade, your stop loss would have been below the previous day's lows. So you wouldn't have gotten stopped out. You would have actually rode the stock. But the thing that we wouldn't like about this MACD, for example, is you notice the momentum on this move had a ton of histogram strength. So way above 1, way above 0, MACD. However, notice those lines did not really drift that far apart. They were very far apart here, which was a good sign. But then they started coming closer as Apple began to move up. The momentum died. This momentum that you saw in the histogram died, which means that this move is actually a weak one. It didn't really see that much strength. So if you were to had gotten in on this crossover right over here around 162, and you got out over at the next crossover, it would have been right over here around 162. So you would have broke even if you were only using the MACD on your hourly chart. Now, the moment that the MACD crosses back over again over here, your entry would have been around 164. And let's see if this would have been a successful trade. Notice how the momentum is weak. So if you were in this, these are signs that you're already paying attention to. You're seeing that the momentum is much weaker than it was here, even though we're higher. So now there's another sign, and then the crossover here, you would have exited this trade at a $2 loss. So far, the MACD signals have been pretty accurate, more accurate on the longer term time frames. Now, as soon as this crossover happened, the MACD shifted below that 0 line once again. The histogram is also back in the red. This cross down was an obvious cross down to a further sell-off. If you're looking at the overall trend of the stock, you can see that it's making lower lows. So sells off, MACD drifts further apart, lines are moving further away from zero, momentum is shifting. Once again, MACD crossover, crosses back down, and you can see that it's just rinse and repeat. So the same thing that happened here once again. The momentum up was strong, the momentum up again was very weak, crosses back down, takes it all the way back down. And so going into a trade based on a MACD crossover, it's going to be dependent really on your own liking, whether you want to pay attention day to day onto the endogram or the histogram. If you want to see if there's a lot of momentum to continue holding, then you want to continue holding. So for example, on a move like this where the stock had bounced up from its lows, there's a lot of momentum, but momentum is dying, then you may want to start thinking about an exit plan, because you're not seeing a lot of that histogram very strong anymore. This is becoming weak, therefore we could see a cross back down. And if, for example, this specific stock falls back below zero, so tomorrow when it opens, if the MACD shifts on the hourly back below zero, then we can essentially see a cross back down and a move back towards a support like 150 to 155. But anyways, guys, I hope that was helpful. This was my MACD breakdown video. I know we covered a lot. If you like what you see, please subscribe to the channel. If you have any questions or comments, please leave them below. Don't forget to thumbs up. Thank you so much.